Opinions and suggestions expressed on the following program are solely those of the participants and are not necessarily endorsed by KRMG, Cox Media Group Incorporated, or the program sponsors. This following program is sponsored by Causeway, LLC. Information in this broadcast is not intended as an investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Causeway, LLC, and Cox Media Group Tulsa are not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Causeway, LLC, and Cox Media Group Tulsa makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk. Gather knowledge in the world of cryptocurrency right now on 102.3 KRMG, Tulsa's news and talk. Welcome to Cryptocurrency with Matthew J. Moore. Matthew is locally based right here in Tulsa. Questions, comments, concerns? Call 918-460-5764 or send us an open mic using the KRMG app. Now, here's Cryptocurrency with Matthew J. Moore.
And good Sunday evening to you. My name's Russell Mills, and thank you for tuning in for Cryptocurrency with Matthew J. Moore. This is the show where we go down the path of cryptocurrencies and blockchain technologies, try to figure out what's going on out there, and guide you safely into this new form of investment. It's only been around for a few years. It's a little volatile, but a lot of people think it is the future. And one of those people is sitting to my immediate left. He is the host and namesake for this show. His name is Matthew J. Moore. Hey, Matt.
Hey, Russell. That's right. Today is Sunday Fun Day, where every day is Bitcoin Day. And today I am back. That's right. Back in the hot seat in Tulsa. So welcome back, T-Town. Back in action. But today we got a loaded episode for you. A lot goes on in the cryptocurrency space. And right now there's a lot of variables, no doubt about it. But that is why we're going to bring you some of the latest news items in the space, and to help us cover these headlines and stories is none other than my trusted co-host, Eric Cooper. Eric, first and foremost, I want to thank you so much for hosting the show while I was gone. You were a real trooper. I heard you guys had some interesting callers while I was gone.
You know, folks wanting to plant Bitcoin, but, you know, trollers like that
We had one case in particular at the beginning of the show. I don't know where that guy came from.
That guy is probably doing some troll stuff somewhere. But and Matt, I do want to stop you right there, because before we do dive into our news stories, I think it's important to let our listeners know that we're still trying to give away that $200 worth of Bitcoin. So on segment 2, we're going to cover all the details about how to qualify, and that $200 might be worth thousands someday. And you know what, Matt? We've seen some stuff, right?
Yeah.
It's been over a year for the show. You've had me in for about a year and a half, and so again, my encouragement always to folks at this point is keep your zoom on the out function, because you zoom out and things look always a little bit more logical rather than, oh my God, there's a dog that just flew past the window, and there's a cow, and this is all craziness, and this is all psychotic. And so, yeah, you got to zoom out.
Yeah, no, those are all facts. In fact, when Bitcoin is perceived to be dead, that's the time that, in my opinion, we should be buying. But I definitely don't want to pass up on this free Bitcoin. And honestly, anybody who wants to qualify, then, when this next bull run comes, it's going to go through the roof. In my opinion, $200 turns into a lot. I've seen it happen multiple times. And yes, price, it goes back up. This whole space is very cyclical, despite the bloodbath that markets might be experiencing now. And in fact, now get this, Eric, there might be a pattern in the Bitcoin charts playing out right now that could absolutely be biblical for us and for those who are invested in the space. And this news story actually comes from Cointelegraph. It's got a little bit of TA in there, and I'm not a TA expert. I hope to get a TA guy to come and be a regular on the show. But technical analysis is what that stands for. And so Bitcoin might be down 70% from its November 2021 peak, but its rebound move in the past 3 weeks is raising the possibility of more upside in Q3. And at the core of this bullish argument is a technical pattern called the Adam and Eve double bottom.
It's my new dance move, too.
Yeah, interesting name, right? Well, notably, this structure appears when the price forms two bottom and recovery cycles. The first cycle is called Adam because it features a potential bottom while the other called Eve is a round shaped. So we've got these two different kind of shapes at play here. But both of these peaks for these cycles form a common resistance line, and the Adam and Eve pattern resolves after the price breaks above the resistance line, accompanied by a rise in trading volume. So as a rule of technical analysis, the breakout's target typically comes at a length equal to the maximum distance between the pattern of the lowest point and resistant line. So what does all that technical mumbo jumbo really mean? Makes me sound smart? Maybe, I don't know. But supposedly, basically what this means is the price, suppose the price closes above the structure's resistant line, then its likelihood of continuing its rally towards 28,000 to 28.5 and higher. But the amounts that basically amounts to a 30% rally in Q3 when measured from the current price level. And currently, the price of Bitcoin is 21,000. And in my personal opinion, if we break above 22,000, then we most likely will hit those targets that article was referencing.
You know, it's a lot of great points because, you know, there's nothing wrong with presenting some hope in the price action. The article does go on to say that on larger time frames, the Adam and Eve bullish structure appears to conflict with another technical setup that suggests more pain for Bitcoin in the days ahead, and that's dubbed as the ascending triangle. These are kung fu moves and Bitcoin terminology. The ascending triangle's bearish scenario says that 16,000 to the 20,000 range, determining kind of on the breakdown point.
Yeah, no, I mean, honestly, I wouldn't be surprised if we do go lower. I mean, I've been feeling we could go lower, and I've been saying maybe 12,000 worst case scenario, but, you know, we'll see. And as much as this technical analysis jargon is good, and, you know, the whole methodology behind it can be very helpful when looking at the price of Bitcoin, we also have to consider fundamentals and macroeconomic factors, which is kind of where I specialize in more.
Matt, this is a kind of a public service announcement for everybody. So all you listeners, it's important to everyone that if you're listening to us, please consider taking your funds off of exchanges. Whether you need to send me a TikTok video asking me how to do it, an email to Matt, something. If you need some help, please get them off there. If you hold your crypto on platforms like Coinbase, Binance, Cash App, KuCoin, any other exchanges, you don't control your funds, right? Mm-hmm. It's the George Bailey. You go to the bank to pull everything out, and it's not going to be there, right? I don't care how reputable they are or how much you like them, how easy are they to use. When bear markets hit, crazy stuff happens. There's been so many platforms like Celsius and now Voyager who've halted the ability for the people to take their coins off. You open up the app and it says, sorry, we've paused these things, and there's nothing you can do. There's no
down for maintenance. Yeah, sorry.
There's no 1-800 number or chat function that's going to help you out. Many companies are at risk of going bankrupt, and they're going to completely fail during the bear market.
Yeah, no, it happens a lot. And if you don't hold, and like Eric was saying, if you don't hold the private key or the seed phrase to your cryptocurrency, then you don't really own them. And you'll ultimately be subjected to the will of these third parties. And I've seen these bankruptcies and court battles go on for years. And when that happens, you have no access to your money. So that can be a challenge. So cryptocurrency, though, is designed and allows you the ability to be your own custodian. So why not? So, you know, let's protect ourselves. Let's learn how to move our funds into our own wallet. And if you don't know, then you can reach out to me, set up a consultation. I'd be more than happy to help you with that. And you can go to mattjmoore.com, send me a message and hit me up. And, you know, I can help you with that process. So...
Matt, again, we bring valid points on here because, you know, when the contagion hits this industry, it hits hard. And the best way to protect yourself and your assets is to go back to the reason why this space was created in the first place. Decentralization, self-custody, that it's what is rewarded in the long run. Using banks and exchanges to hold your money defeats the purpose of why cryptocurrency was created initially or in the first place.
Yeah, no, we've seen a lot of deleveraging going on. We've seen a lot of people getting wrecked right now. I mean, the bad money, the bad investments are all being cleaned out right now. You have projects blowing up, but old habits, they die hard, Eric. And despite the accounts being frozen and companies going bankrupt and the continual layoffs in the space, this is not an entirely bad thing, kind of like I was mentioning there. You know, this, like I said, this space is very cyclical, and this is just a cleansing process. This comes with the territory when a market like cryptocurrency is maturing. We're only 13 years into this new asset class, and if you're in this space now, congratulations. You're still early in the game.
And again, so again, I want to go back to something you just said is, that gets some of the folks out of the way. If you as a company are not being a legitimate custodian of your millions of dollars and your thousands of people using your services, you need to go somewhere. You need to be gone. And, there's a lot of pain for many. But if you do your homework and you have that kind of conviction like we do, this space can be extremely rewarding. You just have to play it smart and enjoy the roller coaster, right? Everyone has to get initiated by the brutal bear market, and it separates the boys to men.
Yeah, no doubt about it, Eric. In fact, I get new hair on my chest every bear market, and before long, I might even look like Robin Williams. But when we come back from break, we'll have some more news stories, some good nuggets to share with you, give you all the details on how you can win that $200 of Bitcoin. So if you're looking for a cheap, easy way, and you want somebody to help you get in the space, just go to my website, mattjmoore.com. I can share you all my little secrets.
You are listening to Cryptocurrency with Matthew J. Moore on 102.3 KRMG, Tulsa's News and Talk. I'm Russell Mills, and remember, very important, if you don't know the seed phrase for your wallet, not your keys, not your coins, right? So there you go. We'll be back with more right after a quick timeout on 102.3 KRMG. Welcome back to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. Thank you very much for tuning in this evening. It has been a crazy week for Bitcoin, folks, just like it's been a crazy month and a crazy year, and it's going to keep being a little bit crazy. It's a volatile industry, right? But predictions of its demise have proven, shall we say, premature. Not once, not twice, but hundreds and hundreds of times, and we'll talk about that a little bit coming up on Cryptocurrency with this guy right here, Matthew J. Moore. Hey, Matt.
Hey, Russell, that's right. Yeah, no, it's actually quite hilarious to read.
I've been looking over that website. When you guys bring it up, I'll read a couple of headlines, give you an idea.
Yeah, I know. It's a real confidence booster if you're new to the space. But we'll talk about that here in a minute. But yeah, I want to welcome you guys back. We're here. This is actually one of America's only radio shows, if not the only radio shows dedicated to Bitcoin and cryptocurrency. And to help me, and who's been helping me for quite some time now, is my co-host, Eric Cooper.
Hey. So yes, Matt, we have enjoyed 53 weeks plus of the show. Obviously, there's
actually a little bit more.
Yeah, there's a lot of episodes where we've had reruns. We've had Kansas City Chiefs football, so we didn't run. But it's every week is different. And again, there's a lot going on out there, and Bitcoin's not going to die. If you follow Dan Held at all, if you see anything that he writes, he posts it maybe once a month, whether it's an auto post or what. He says, these are all the times that Bitcoin has died, and it's just silly because it's not going anywhere.
Right. Well, and Eric, if people miss our episodes, where can they find all our past episodes?
What's really great about it is we've got it pretty much on every platform. Spotify, Apple Podcasts, Google Podcasts. You can go to krmg.com. You can just Google cryptocurrency with Matthew J. Moore on demand. You can go in and find all of our episodes, minus the phantom missing episode when the first correction of my tenure ever happened. And you can go find those out and go back and listen. We dive into several different aspects, but from anything from what is money to let's see here, we've also talked about mining,
wallets, exchanges,
planting your Bitcoin on the moon.
Yeah.
We'll get to that someday.
Yield farming, I think that's what they call
it. Yield farming.
That's a joke, guys. But anyways, yes. So remember, we actually are still giving away $200 worth of Bitcoin to one lucky winner. All thanks to our show sponsor, GetHedge.io. But before we give out the details to qualify for that prize, Eric, can you share with us about our sponsor?
I love live reads. This segment is made possible by a company called Hedge. Do you have a strategy to obtain cryptocurrency on a regular basis? Dollar cost averaging, that is, Matthew. Buy today, buy tomorrow. Do you plan on automating your dollar cost averaging? What about getting all or even part of your paycheck in Bitcoin? Hedge is revolutionizing how that you can get paid. Hedge makes it easy to automatically convert your pay into crypto. Whether you're an employer or an employee, you can get started in 4 easy steps. Start getting paid in Bitcoin, Ethereum, or Litecoin. Crypto is a long-term play, and start a strategy today. Hedge is here to make it easy to stack them sats month after month. What are you waiting for? Start living life on the hedge. Check them out at gethedge.io. Once again, gethedge.io.
That's right. And if you are curious, here's how you can qualify for that $200 worth of Bitcoin. Whether you are listening live or later on the podcast, you can still qualify. Doesn't matter to me. But if you go to my website, mattjmoore.com, and scroll down to the resource section, you'll see a button that says Get Hedge. Click that and sign up for Hedge and start having a portion of your paycheck allocated into Bitcoin. It can be as little or as much as you want. Using Hedge, you can skip the exchange experience, which is actually a pretty good thing. And you can have all of your crypto sent to any self-custody wallet that you want and you are in control of. And once you sign up and start using Hedge, Hedge will give me a list of emails from those who signed up with my referral link and started using Hedge. So come July 17th, which is coming up soon, I will draw a winner and send them the $200 worth of Bitcoin. It's truly that easy. So go to my website, mattjmoore.com, and scroll down to the resource section and click that button that says Get Hedge. We've got you covered. So, and if you got questions, just send me a message on my website.
All right, Matthew, now it's time for speed round of cryptocurrency headlines and news. And first up, obviously, macroeconomic trends are impacting every single market. Yep. But what should we be keeping an eye on for the rest of the month? How about July 13th? So I believe that's Wednesday, right? We should be getting the new inflation data, and that's definitely something to watch. July 26th, 27th, we have the next Federal Open Market Committee meeting, which should give us details on the Federal Reserve's next moves. I'm pretty sure those are going to be tantalizing. The quarter two GDP estimate will be out on July 28th, and quarter two corporate earnings should be coming in our late July. All of these coming reports will impact stocks, Bitcoin, and crypto at large.
Yes, it will. And I will definitely be watching those numbers. July could be an interesting month. But for example, the chairman of the Federal Reserve has recently changed his tune and came out recently stating that he now thinks sky-high inflation could turn permanent. And in my opinion, that probably means we have two more major rate hikes from the Fed in July and September. So, lots
of things at play here. Even the managing director of the IMF, the International Monetary Fund, recently stated that the global economic outlook since their last update in April has darkened significantly, and that a global recession is not out of the picture at this point. But let's not get depressed. On a more positive note, Matt, did you see the comments of the chairman of the Rockefeller International? He was recently on record saying that he thinks Bitcoin's comeback will be like Amazon in the 1990s.
Yeah, that's going to be it. That and I concur with him. I actually feel the same way. And Bitcoin will bounce back to life. Bitcoin is a master at faking its own death. And if you haven't been to the website, and this is what we were talking about earlier, it's called 99bitcoins.com/Bitcoin-obituaries. Then if you haven't seen that, you need to go check it out. The website basically documents every major news article that has declared Bitcoin dead. And according to the site, Bitcoin has now died 459 times. It's really funny stuff. I recommend that you check it out for a good chuckle.
Sounds like Groundhog
Definitely
Day.
smashes Mark Twain's record.
Oh, yeah, there you go.
Was
there
one.
you go. And
I'll tell you, the worst year was 2017. I mean, there was article after article with headlines of the Bitcoin hoax.
Right.
10 years in, no one's come up with the use for blockchain. I don't think that's true.
Yeah.
Bitcoin is heading to zero. Many will lose everything when the bubble pops, warns investor Peter Schiff. I mean, dire predictions that, I'm pretty sure it's a long ways from zero. Still, right?
Yeah. 100%. And, last segment we were actually talking, Matt, about taking your money off exchanges. And there's actually some good news on the exchange front because Robinhood has now made it possible for you to continue to hold in custody your own money, but still send money via Bitcoin. And so it's something I'd highly recommend because, again, more and more people are going to be implementing this. Amazon's probably going to be coming. Everything's going to be coming to where you can actually use Bitcoin to send money quickly between you and small businesses.
Yeah, no, it's fantastic news, Eric. And that has been a long time coming. So well-needed feature. I'm happy they're finally doing it. And just for fun, when we come back, I've got some fun facts, some cryptic facts about Bitcoin that you might not be familiar with. So when we come back, I'm going to share those with you.
Cryptic facts about crypto. Yeah. I mean, this stuff just practically writes itself. You are listening to Cryptocurrency with Matthew J. Moore. We're live and local and proud to be one of the only radio shows in the world dedicated to this topic. So you've come to the right place if you're looking to learn more. Stick around because we're not done, not by a long shot. We'll be back after an update on your news. You're listening to 1023 KRMG, Tulsa's News and Talk. Stick with us. Welcome back to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. We do appreciate you hanging out with us and learning more about the world of blockchain technologies and cryptocurrencies. And if that is where your interest lies, you have definitely come to the right place. As we mentioned earlier, if you ever missed an episode, you can go on to krmg.com or the KRMG app, hit the on-demand section, and you will find them. Dozens of them, because we've been doing this for a while. We remain one of the only shows, and I'm going to go ahead and say the best show about cryptocurrency, at least in the United States, if not the world, all thanks to this guy, Matthew J. Moore. Hey, Matt.
Heck yeah, I will concur with that fact. In fact, we do this every Sunday, and we always have a blast doing it. And to help me with these conversations, not just Russell, but also my co-host, Eric Cooper.
Matt,
want to say hello?
Every Sunday. It's not every Sunday, but the ones that we're not here, I'm sad. A little more sad.
Yeah. No, yeah. Well, and it's okay to switch it up every once in a while. But before we went to break on the last segment, I mentioned that I was going to share some cryptic facts, some hidden meanings within Bitcoin that you may not be familiar with, some things that might pique your interest. But guess what? I think I'm going to wait until the end of the show to share that stuff.
And he calls an audible.
Yeah, right.
Omaha.
But yeah, so stay put if you want to find out those fun facts. We'll talk about that at the end of the show. But yeah, let's go ahead and dive in segment 3, Eric.
Yeah, Matt, in the previous segments, we kind of talked about exchanges and companies going insolvent, and that's how risky it is to keep funds on these type of platforms in the bear markets. But was this bear market triggered by free market forces, or did regulators have a part to play in this crash as well? It seems to me that the space was way over leveraged, during the bull market.
Well, I mean, yeah, there was tons of leverage. I mean, we were definitely over leveraged, and it's a good question. I mean, it's one that people are asking, and like I've mentioned before on many shows, I do think the Federal Reserve's monetary policy had some part to play in kind of creating this cascade, but it's also possible that the Securities and Exchange Commission, the SEC, may have had some role as well when it comes to the space being over-leveraged. Well, you might be thinking, Matt, what do you mean by that? I thought the regulators are here to help us. Well, Caitlin Long, who is the CEO of Custodio Bank and who also played a key role in Wyoming's positive cryptocurrency legislation, which I actually spoke with her back in the day in 2019 when I was working on Oklahoma's, she had made some really good points in an article from Newsweek. And in that article, she states that the crypto asset bubble inflated when Wall Street traders crowded into crypto, and the Bitcoin market had never before seen this kind of leverage or these games that typically afflict the traditional markets. And so, she makes the point, nowhere in Satoshi's brilliant Bitcoin white paper did the words margin call appear. And it didn't take long for these crypto derivatives trading volume to start to explode.
Matt, before you continue, let me kind of share with the listeners what derivatives are, just so that they can have some context. A derivative is a financial contract that derives its value from an underlying asset, but the contract seller doesn't have to own the underlying asset itself. Right? Seems like a good play.
That's right.
With derivatives, there are large risks at play. The most dangerous is that it's almost impossible to know any derivative's real value. That's the reason why mortgage-backed securities were so deadly to the economy. No one, not even the computer programmers who created them, knew what their price was when housing prices dropped. Banks had become unwilling to trade them because they couldn't value them. Another risk is also one of the things that makes them so attractive is leverage, right? For example, future traders are only required to put 2 to 10% of the contract into a margin account to maintain ownership. If the value of the underlying asset drops, they must add money to the margin to account to maintain to that percentage until the contract expires or it's offset.
You're right, Eric, and that's important for people to know these facts. It's good to have context because Caitlin does go on in the article to say that leverage lenders were touting supposedly bank grade risk management tools that leverage could be managed without risk of bankruptcy. Well, we know that's been proven wrong, but why? No one, and this is why, no one can create more than 21 million on-chain Bitcoins. This is a feature of the Bitcoin protocol, not a flaw. It basically means that no one can create more Bitcoins to bail out over-leveraged players that have sold more claims to Bitcoin than real Bitcoins exist. So it also means that once traders started using leverage, bankruptcies were essentially inevitable. And regulators, especially the Securities and Exchange Commission, kind of bear some blame. And they've been slow to crack down on the fraudsters, but then also to approve responsible players. There was only one SEC-approved way for investors to gain exposure to Bitcoin via their brokerage accounts from 2015 to 2021, which was the closed-end fund Grayscale Bitcoin Trust, also known as GBTC. So that's something to account for.
So because this was the only product available for broker accounts, did that mean demand far outstripped supply? Because ultimately it could cause prices to climb.
Yes. No, I mean, as a result, for years, that the GBTC's price, it consistently traded far above Bitcoin's market price. So Caitlin, in the article on Newsweek, basically went on to say that leverage poured in because fund shares could be created at Bitcoin's price and sold to retail investors at the higher GBTC price, a trade viewed as a sure thing by Wall Street. So that ended last year, though, when the SEC, for the first time in 6 years, finally began approving competing products. Sure enough, once competition came, that huge premium collapsed, and GBTC now trades at a more than 30% discount to Bitcoin's price. Hence, leveraged players suffered big losses.
Obviously, regulators just needed to really help the situation by approving more competing products sooner.
Yeah, no, like I said, it took. They didn't do that. They didn't approve more players for nearly 6 years. So that's kind of a big deal.
Yeah, what's even more interesting is that the SEC is now being sued by the Grayscale Bitcoin Trust for their continual denial of approving a spot Bitcoin ETF. The SEC seems to have found no problem approving derivatives or Bitcoin futures ETFs, but for some reason, they won't allow spot ETFs where shares are actually redeemable for real Bitcoin.
Yeah, no,
it's bizarre because it's the situation where derivatives like futures are now considered a safer investment than actually holding the spot asset. This is it's been in contradiction for a long held thinking that derivatives are obviously riskier.
Yeah, no, I mean it's true. I mean that's kind of been the case, and it's going to be interesting to see how this plays out and how this goes through with them suing the SEC. Hopefully they'll approve a spot ETF, spot Bitcoin ETF. And honestly, a lot of people have been predicting that it's just a matter of time. But, every time one gets submitted, it gets rejected. So
let me see if I understand this. An ETF is an exchange traded fund.
Yeah.
So when you're buying that ETF, you're not actually buying Bitcoin. You're buying the trade in Bitcoin. You're sort of buying the value, but not the actual asset.
A paper version of it.
Yeah.
And what's crazy,
which seems to be contraindicated by the entire reason for Bitcoin's existence. So it may be not a big surprise that Wall Street is struggling with
in my opinion, it's just because they're taking a new world, which is Bitcoin and cryptocurrency, and they're trying to apply old world tactics that have been okay. And there's a separation for a reason.
Right. Well, and for those who are unfamiliar with an exchange-traded fund, it is a type of pooled investment security that operates much like a mutual fund. Typically, ETFs will track a particular index, sector, maybe a commodity, which Bitcoin has been classified as a commodity, or other asset. But unlike mutual funds, ETFs can be purchased or sold on stock exchange the same way that a regular stock can.
So in other words, you're not bound to hold that fund for a certain amount of time. You can trade it daily, and that is why ETFs have become a very popular instrument of all types, not just this one, but a very popular instrument for investment. It's it's more liquid.
How much more time we got?
You got about 3 minutes.
You know what, Matt? There's some news that we had listed up here is 2023.
Oh, yeah. Bitcoin 2023 is coming up, isn't it?
So they announced the dates. We're back at Miami Beach. So again, I encourage you guys, we are going to be partnering up again. We've already had those conversations. I don't think we're going to do the Amsterdam one because I don't think I got that in my calendar capabilities. But May 18th through the 20th in 2023, I think they listened to some of the folks and said, hey, listen, doing it in April, not really great because we got kids and school and stuff like that. So this is going to be at the end of the school year. Hopefully it will not be too hot because
June was pretty brutal in 21.
June was rough.
So they tried June, too hot. They tried April. They still got a heck of a lot of people, but they got some complaints. So now they're going to shoot for May and try to split the difference.
Well, and I don't think that they knew what other big events were happening around, and they had the Pride Week also the same week. So you had two huge flocks of people coming through Miami Beach.
There was tons of people there. But, I mean, yeah, I would most certainly prefer April. April was a great temperature-wise, and we'll see how it goes. But we will have a discount code. So if you continue listening to the show and you've heard us talk so brilliantly and excited about this conference, there's a reason. There's a lot of fun things to do there. There's a lot of education. People from all around the world come there. You hear multiple languages going on at the same time, and it's just a whole lot of fun getting with people who are excited about this new technology. But we will have, I believe it'll be a 10% discount code again, and like they did last year, they raised the prices on a regular basis.
I was just going to ask, what did the price start at last year, and where did it end up before they?
Prices start at $199 if you paid in Bitcoin, $299 if you paid in cash, in fiat, and then every month it went up in $100 increments. And so when we finally got around, it was $899 for a ticket.
Yeah, I think right now, we're like $400 and something right now is what they're listed for. But
they were selling tickets before they had the location nailed down.
So know that the price will go up. So you guys are getting a heads up now.
Yeah.
You're getting, the warning shot over your bow of if you plan on being in Miami, you might want to think about getting on Matt's website, getting that discount code, and getting those tickets now. Because if you wait until March or April of next year, you're going to be very
and Bitcoin's not going to be dead. I'm going to go ahead and say in May of 23, it might be really fun at that point.
Yeah, we'll be definitely thawing out by that point. But it's a lot of fun. We always take a bunch of Okies down there.
Yep, and they always have all kinds of great stories to tell me when they get back. Not all of which we can necessarily relate on the radio. So I'm just saying, it sounds like a fun time. Hey, you're listening to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. We're going to take a quick time out. We'll be all right back. This is 102.3 KRMG, Tulsa's News and Talk. Welcome back to Cryptocurrency with Matthew J. Moore. This is 102.3 KRMG, Tulsa's News and Talk. We are live and local in the big city of Tulsa on a pretty steamy Sunday afternoon, early evening. It's going to be pretty hot this week, too, but maybe we'll get a little rain. Maybe we'll get a little break. In any case, whatever happens, we know that Mr. Moore has his finger on the pulse of the cryptocurrency world. And so we've been talking today about some of the news and some of the predictions about what's going to happen next. And now you've got some interesting cryptic lore to share with us. Please welcome Matthew J. Moore.
Hey, thank you, Russell. That's right. This is going to be the segment where I reveal some fun little facts that you may not know about Bitcoin and its creator. Some of it you might know. But before we dive into that, I want to welcome back my co-host, Eric Cooper.
Matthew, I had one major flaw in covering for you when you were gone. Mr. Scott McElroy, our wonderful sponsor, we had a call come in segment forward, so we didn't get to read. So Matt, can you give me a little bubble up goodness here?
Yeah, I think because of that blunder, I think he's not going to sponsor us anymore now.
Scott, I love you. I'm so sorry.
I'm just messing
whatever I need to do, Scott.
We love Bentley.
Just messing with you. All right, well, guys, this show is only made possible by our wonderful sponsors, and today the segment is brought to you by our newest and local sponsor. Summer is in the air. It's here. That's right. And in Oklahoma, that means it is the perfect opportunity. Really, it is. Perfect opportunity to show off that whip whip. And for all those people that, hey, what is a whip? Well, that means automobile, right? Well, and essentially this segment, again, is brought to you by Bubble Up Car Wash. We love Scott. But if you want to find them, they're off of Broken Arrow, off of 470 East Kenosha Street. They are Broken Arrow's newest locally owned car wash with all the bells and whistles to make your car clean, shiny, and dry. Whether you're looking to rinse off some of that mud or shine those 20-inch rims on that Impala, come take advantage of their free towels, vacuums, and air wands. They have unlimited wash plans starting at $19.99 a month, and you can add a family member for just $15 a vehicle. So what are you waiting for? Go cheer up at Bubble Up, and who knows, you might catch a glimpse of their family dog, Bentley, the Bubble Up Pup. Check them out at mybubbleup.com.
Matthew,
what's up?
Which one do you want to do? Do you want to go back and do our fun facts?
Yeah, I do want to mention this real quick because I've been teasing it the whole time. So if we run out of time, people are gonna be like, "Oh, Matt, you teased it the whole time, but you didn't share those fun facts, right?"
Charlie round us.
Yeah, the crypto facts or the cryptic facts. All right, okay. So the founder, the creator of Bitcoin, Satoshi Nakamoto, you might have heard us bring that up a couple of times. That is an alias, right? He didn't want to be known, but he did interact with a bunch of developers, bunch of cypherpunks. And here's what's interesting. When Bitcoin's first block on its blockchain was mined, there was a hidden message in this Genesis block, and that would basically set the tone for Bitcoin's purpose. It's important to note that Bitcoin's white paper was released back in November 2008 when the world was drowning in a massive global recession, and that period was known as the Great Recession, and it was a time when national economies were seeing huge decline. Many countries were seeing their unemployment rates going to the moon, and the stock market was crashing. Housing markets were also plummeting, and private and commercial banks were collapsing, and financial institutions worldwide, along with governments, were implementing fiscal policies that were designed to stimulate the struggling economies of nations. So to make a reference to the situation, Satoshi basically made sure to introduce a hidden message on the Genesis block, and in that it said it was referring to a Times article or Times newspaper, and the hidden message read, "The Times, 3 January 2009, Chancellor on brink of second bailout for banks, Satoshi Nakamoto." So what's interesting is he also hid the same text in reverse on line 1616 of Bitcoin's original code. But there is something that I myself just learned this week, something that I thought was pretty fascinating. So everything Satoshi did was intentional. And so, for example, Satoshi, when he was communicating with these developers and cypherpunks through the internet, he listed his birthday as April 5th, 1975. And here is why that date is important. April 5th is when President FDR signed the unconstitutional order 6102, making it illegal for Americans to own gold. And the year 1975 was when Americans could own gold again. So everything, like I said, Satoshi did was for this purpose of financial freedom. So I think it's pretty cool and cryptic that he put all that stuff in there. What do you think about that, Eric?
Again, the thing that blows my mind is this was going to be big, right? If people could really see the problems that our current situation offers us, Bitcoin, blockchain, everything was going to be huge. And this guy said, you know what? I don't want any credit for this idea. I just want to let it out here and let us get going. And so, that just blows my mind still every single time I think about it, because when I hear his name brought up.
What blows my mind? We still have no idea who Satoshi Nakamoto is. We don't know if that's a person, a man, a woman, a corporate board, aliens from outer space.
Right.
And the fact that they've been able to keep themselves anonymous despite the incredible explosive growth of this sector is amazing to me.
Yeah, it is absolutely amazing. And it's kind of poetic, and I think it would kind of ruin it if he actually did show his face. So.
It might be kind of anticlimactic to find out it was Elon the whole time.
Yeah, right.
It wasn't. Just saying.
We can tell who it isn't.
You've been shoot that rumor down right now. You've been listening to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. Make sure and join us again next Sunday, 5 p.m. Tulsa time for Cryptocurrency with Matthew J. Moore on 102.3 KRMG, Tulsa's News and Talk. See you then.